Now, according to new reports by Goldman Sachs, central banks are stepping up their gold purchases, and one country in particular is drawing attention. It's China. Gold has long been a bedrock of reserve management for central banks, but analysts say we're now seeing a structural shift. In its latest briefing, Goldman Sachs estimates global central banks purchased about 64 tons of gold in September 2025, up from just 21 tons in August. And China is believed to have accounted for about 15 tons of those purchases in September alone. Goldman's analysts say this isn't a short-term blip. They forecast that central banks will average around 80 tons of gold per month from late 2025 through 2026. But why is China buying? Analysts highlight three main drivers: reserve diversification, hedge against geopolitical risks, and reducing reliance on traditional reserve currencies. China's official gold allocation is still under 10% of its total reserves, far below peers like the US, Germany, or Italy, where gold may account for roughly 70% of reserves. The US is the world's largest holder with over 8,000 tons of gold, while the gold reserves of Germany and other major European economies range anywhere between 2,000 to 3,500 tons, and China now holds roughly 2,300 tons, closely following Russia, which has the fifth largest gold reserve. But analysts say the allocation remains low compared to overall reserves. In short, China is playing catch-up in the gold reserves game, buying steadily to reposition itself for the next phase of global monetary and reserve asset evolution. China's purchases in September alone represent nearly a quarter of global central bank buying that month. And among the top 6 gold reserve holders, China is the only country in that which has increased its gold reserve in 2025. At the same time, these central bank flows are fueling a broader rise in gold prices. Goldman maintains its target of $4,900 per ounce by end of 2026, citing the sustained accumulation by official buyers.